Oh man, this is an emergency update because Bitcoin is finally breaking through a key level which we've been monitoring for over 10 days, but we need to exercise some caution. So I'm bringing you this update to make sure you don't make any rash decisions. Guys, don't forget to smash the like button, hit up the subscribe button, make sure you are checking out BYBIT and BitGET, links in the description if you want to trade this move, because I think we are finally ready for our next big long position. As I've been saying, this critical 24,000 level here has been the resistance we've been facing for a while. Let me show you here on the 4-hourly chart. We got the breakout from the channel. We got rejected by 24k. We got sent back into our channel. We came back up with vengeance, created this bullish continuation pattern, which I shared in my video just shortly. And you can see we've played this move out now, beating this previous high from this wick just to the left-hand side here at about 24,400. Also much higher than this high. This is a good, decent volume breakout we're seeing here on the 4-hourly candles. If I show you it on the hourly, we are seeing decent volume come in, which is giving me confidence behind this move. Now, where do I think this move can go to? Well, I'm personally going to be trading this move up to about the 28,000, 29,000 mark. I'll have a few take profit levels on the way up, but why do I think that that 30,000 level is where my maximum target is on this? I'd really want to be out of the position by the 30k level, and the reason I'm saying that is this chart here, which I've been sharing with you for a while. And when you bring out the EMA ribbon, you'll see here at about 29,400 is where the first line of the EMA ribbon comes into tag. So this relief rally, I'm thinking, tends to go into the EMA ribbon. So I will be looking to take profits expeditiously as we head towards this level, okay? So that's what I'm trading, is this range here. Now, also, I want to show you this from a different pattern. Let's remove this EMA ribbon. Let's go over to the hourly, and you will see we are playing out this bullish continuation pattern, which I shared with you yesterday. So we're in this bull flag pattern. You see we're slightly falling off now, and now we're going back to continue on. Remember the technical target from this bull flag, from the flagpole, which you measure from this point to the tip there, which you put at the point of breakout, which is what I've done here. Again, you can learn all of this in our TA education program. Tag me in the Discord to find out more about that, and that takes you to 27,600. Okay, that's what we're working to here. So really exciting move. I'll be taking this move using BYBIT and BitGET, links in description. You guys, if you want to claim your trade bonuses, you can do that in the description. But this is finally a really big move. Now, again, I want to caveat, this doesn't suddenly mean long-term I'm bullish. We're going to go back to the moon now, back to 69,000. I made it very clear that the price target here is showing me that level around 29 to 30,000. That is what I'm playing with here, and I will be taking profits in between here and there as well. So really key breakout. I do have one warning for you, and that is we are on weekend volume right now, okay? So please, I am normally very cautious opening up long trades on weekend volume. So if you wanted to do this a little bit more cautiously, you would come across to the daily chart, and you'd want to wait for this daily candle to close above, which is what we're trying to get here, okay? So textbook definition is you want to enter this breakout when you get the technical close. So if we get this daily candle close, that's great, because if you remember the previous day here, we were above 24k, but look how the bulls closed it, the bears closed it back down again. You see that? So if you took your trade prematurely, you get things like this candle, which is what we called out perfectly, and this candle. Now the difference is we've just had this candle and then we followed it with the green. So this is showing that the bears weren't able to do this, which it did last time. Because remember, we got excited, we thought we were going to break out, we got rejected, and then we got sent back down. This time we got excited, we got rejected, but today's has finally broken through. So if you were following this from a textbook, you'd wait for this to close green, and you wait for tomorrow's candle to open up green, and then you put in your massive long position to ride this up. Now, I'm already entering and laddering into this position now. I'll ladder more into this with more size tomorrow if we get that green candle tomorrow, okay? So I'm already in the position. I'll ladder in some more as and when. Now, again, I want to remind everybody, we are trading against the trend. The longer term trend is still a downtrend, so be very, very careful. If you're not experienced at trading, then stay away or play with some lunch money which you're willing to lose while you practice. Very, very important. Fear and greed index has notched up to 42. To put that into perspective, guys, the market is feeling really, really comfortable right now. Look at this. I mean, it feels ages ago that we were sitting here with fear and greed index at 8 and 9, and we were making videos every single day as the fear and greed index was for so long in this kind of pit of doom, right? And now look how quickly it climbs back up. That FOMO comes in quick, and the pumps can happen quick. So if you're procrastinating on the sideline, you could easily miss out on some of these moves, okay? So definitely here for you guys to watch this. Also, you can see that US equity markets finished off very strongly. I made a video on that yesterday. Despite everything, crypto seems to be unstoppable over the last couple of days. I mean, it doesn't want to pay attention to the macroeconomics. It doesn't care that we had 75 basis points. It didn't care that PCE inflation was at 40-year highs. It didn't care that GDP was negative and we're officially in a recession. We didn't care about that Google and Microsoft misearnings, Snapchat misearnings, Twitter misearnings, right? Market just wanted to move. And sometimes, instead of being emotional about it, you got to go with the trend, right? And you got to go with saying, okay, if these guys are wanting to rally, I'm not going to sit on the sidelines. I want to take advantage of this with my trading portfolio and chase after this. Now, for your long-term portfolio, very important. There's a nuance here. For your long-term portfolio, I personally would not be chasing green candles unless I was not in the market at all. Remember, I already said I'm 85% in this market. I've got a little bit left on the sidelines to dollar cost average in if I want to, if we fall back to these downsides. Now, if I wasn't in the market right now, I was literally just on cash, I would be getting in this market. That's the only time I would break the rule to say don't chase green candles, because whether you like it or not, a 24K Bitcoin is still better than nothing, right? It's still low prices. But if you guys were around in this point, you were dollar cost averaging in, you're happy with your position. If we went to the moon now, you're content. Obviously, you're always going to have that feeling that you wish you bought more, but you're content with what you've got, then I personally wouldn't be chasing those green candles. Hopefully that makes sense. Hopefully those nuances are coming through. The other thing to point you guys out to is this very important metric. Again, a majority of the market is pricing in 84 basis point rate hike at September. And this is where the confidence is coming. In other words, why the market is feeling so confident, despite all the negative gloom I've just shared with you, they feel as though we have hit peak. They feel like that is the worst GDP reading we're going to get, that recession. They feel like we're going to become positive in the next quarter. They feel like the interest rates are going to be worse. No more 75 basis points. We're going to have 50 basis points, then 25 basis points. They think we've just hit peak fear. And the market's job is to price in ahead. Now, does that mean that's going to happen? No. A piece of news can come out and throw us back to the downside. That is why we need to be very, very careful. Okay? And important for us to understand those nuances. Also here, I want you guys to look at this important level on the daily EMA ribbon. Look at that daily EMA ribbon. Let's look at that. Perfect textbook. Finally, we got our close above here. Weak candle yesterday, but still above our EMA ribbon. And this is your first proper confirmation that you're breaking nice and clear through this EMA ribbon. This pattern now looks really, really good. We've finally got our higher lows, which we've been speaking about, but we've now finally managed to marry it up with a higher high. This gives you confidence that this is an uptrend that can give us the relief rally into that target range that we want. Because remember, the next set of resistance comes in around this period here, right? If I just zoom out, that's this chunk here. That's our next set of resistance, okay? So what we do need to look out for, which is what I'm also going to show you, is let's bring out the Bollinger Bands. And you can see that when they constricted, when they really get narrow in this period, that's when you normally expect a big volatile move. And you can see now, we're starting to try push above the top of our Bollinger Band. A nice break above this over the next couple of days would signal a nice big move to the upside. Again, if you study Bollinger Bands, you'll see whenever you break them, whether it's to the downside, you get a big move to the downside. And similarly, when you get a big move to the upside is when you break it to the upside, which we can see over there. Okay, if I bring out the VPVR, the volume profiles, let's take a look at that. And what I want to show you here is very important as well. If I just get zoomed in here, there we go. So what I want to show you is one, now that we've cleared this level, look at that. This is thinly traded here. See how quickly we fell from the 30,000 level? See how quickly we fell there? So just because we fell that quickly, we can easily pick that gap up quite quickly as well, because it's very thinly traded. So I'm fully expecting this to be a nice, quick, expeditious move up towards that range. And that's why, for me, this is a nice risk-reward trade for me to be taking. But again, I will be taking profits, because look at the volume and the resistance that's going to come in around this 29, 30K range. We've also got that weekly EMA coming through as well. So there you have it, guys. Don't forget to smash the like button. Don't forget to subscribe if you appreciate this quick emergency update on a Saturday for you guys. Check out the links in the description to BYBIT and BitGet. Go watch this video here, and I'll see you in the next one.